Hello everyone and welcome to TradeGuide. So today we are going to cover the topic of PCR indicator. So when you go to the left hand side of your screen, you have a menu PCR indicator over here, the sixth one, and click on it. So here you have the page of the PCR indicator, and in today's video we are going to cover what is PCR indicator and how will you use it for trading. Okay. So to understand what is PCR, let me take you to a sheet. So here it is. PCR represents put call ratio. It is the number of put OI divided by the number of call OI. The call open interest and the put open interest. Now, important point that we need to know is that whenever we use the PCR indicator, it is always used from the seller's point of view, not the buyer's point of view. That means if the put OI is more than the call OI, we will always consider that put sellers are more in market compared to call sellers. And if vice versa, the call open interest is more than the put open interest, then we will consider that call sellers are more in the market than put sellers. The PCR has three possible conditions, and we are going to know that how to interpret all the three conditions. Now the first condition that we can come across is PCR equal to 1. Now when does this happen? When the put OI is equal to the call OI. And by the put OI I mean that the put seller and the call seller are equal in the market. Suppose there are 100 put seller, so there are 100 call sellers in the market. At that time the PCR is equal to 1, and the interpretation that we get from that is neutral. That means that the PCR neither indicates a bullish or a bearish signal. The second condition is when the PCR is greater than 1. Now, whenever the PCR is greater than 1, the put OI is more than the call OI. And by the put OI and call OI, we will consider that put seller are more and call seller are less. Okay, so put seller having a bullish view and being more in number will create a bullish scenario in the market, and they will push the prices higher. So we will have a bullish interpretation. The market is going to be bullish according to PCR. The third condition is PCR less than 1. And when does this occur? Whenever the call open interest is more than the put open interest. By that I mean the call seller and the put seller. So the call seller are more in number compared to the put seller. That means call seller having a bearish view, call buyer having a bullish view, and call seller having a bearish view. So the call seller are more in market and the put seller are less in market. So the call seller are having a greater power and they will push the prices downwards. That is why we interpret it as bearish signal according to the PCR indicator. So now this was what exactly PCR indicator means and how we interpret it. Now we are going to move on to TradeGuide and learn how to use PCR indicator for trading purpose. So just switch on to TradeGuide, and here it is. So on TradeGuide you have three different tabs here: the live strike chart, the live intraday chart, and daily historical chart. On the live strike chart you can see the PCR for different strike prices of different particular strike prices. For Nifty I can see the PCR for 10,750. I can see it for any other strike price which I can select in the drop down menu. I can also see it for 11,000. Here you can see it for 11,000, and you can also see it for any other strike price like suppose 10,000. So here you have it for 10,000. We have the daily strike 5 simple moving average of 5 days. You can either close it down or keep it, and in the same way you can also do with the 10-day simple moving average. It's according to preference, which one do you want to use, or you want to use both of them. Okay, so now next move on to live intraday chart. So as we go on to the live intraday chart, you see this is the live intraday chart. Now the live intraday chart, what does it mean? The previous chart, the live strike chart, was for particular strike prices of Nifty. But the live intraday chart is in total, like all the strikes, the total put open interest and the total call open interest. When we find out the PCR from them, we get the live intraday chart. So here I go. What do I mean to say with this is, at 9:55 a.m. the PCR of 0.70 was the total of all the put OI and divided by the total of all the call OI. Okay, you have similarly you have the 10-day simple moving average and the 5-day simple moving average. You can also select the OI line chart. The OI line chart shows the daily intraday call OI and the put OI, and where they do a crossover. Like here we are seeing a particular crossover. Either we can't say that this will continue or not, but here there is a crossover. So you can either you can remove it as per as you wish. These are the two ways of representation. You can use the bar chart or the OI line chart. When you use the bar chart, and the actual way of using the PCR indicator generally is that whenever you see the PCR bars, the red PCR bars giving a breakover to the 5-day moving average or 10-day moving average, any one of them, you can take a buy signal. And I recommend that you do it after you see 2 bars for a confirmation, and you can take a buy signal, and whenever there is a crossover to the downside you can take a bearish position. So this is not generally the thing that you have to use it for a bullish position. You can also use it for a bearish position. So we are taking all the other conditions in Bank Nifty as well. Like you can see from opening today, Bank Nifty has been roughly trading above the 5-day simple moving average till about 9:50. After that, it gave a crossover to the below. When we view Bank Nifty, we can see that from 20 February 9:15, since the market opened, Bank Nifty gave a bullish trend, and when we measure this, it is about 0.92%. After this, you can see that Bank Nifty was in bearish trend till about 10:20, and we can see here that Bank Nifty being bearish to about 0.29%. So this is how we use the PCR indicator. So when we use the PCR indicator, we can use it for both the sides, both the bullish and the bearish sides. Whenever the PCR bars, the red PCR bars, give you a breakover above the 5-day simple moving average or the 10-day simple moving average, whichever you are using, you can take a bullish position in the market, because the put sellers are overpowering the call sellers. So if we need to go with the put sellers and be bullish on the market. On the other hand, when there is a downside break, you need to go with the call sellers because they are more in number in the market. So we need to take a bearish position. So this was all about the PCR indicator.